space. UPI monthly transaction volumes remain above 11 billion for the second month in November. According to NPCI, UPI recorded 11.24 billion transactions worth 17.4 lakh crore rupees in November. However, the volume of transactions saw a decline from 11.41 billion in October.
E-commerce giant Amazon is planning a significant restructuring of its executive team in India. As per reports, the online retailer could possibly explore a new dual leadership structure under country manager Manish Tiwari.
Ola Electric records the highest ever monthly sales of its electric scooters on the back of the strong festive demand. The Bhavish Agarwal-led EV company saw nearly 30,000 registrations in November. Ola Electric leads the market, representing a third of the 85,000 plus EVs sold last month.
Health tech startup Xyla raises $4 million in Series A led by Xfinity Ventures. The round also saw participation from Sony Innovation Fund, Venture Catalyst and Aureolis led by Paula Mariwala.
Aavishkaar Capital invests 133 crore rupees in Tao Digital Solutions, makes this investment from Grand Anikit 4 Fund to assist Tao Digital Solutions in acquiring Prigeo technologies.
Microsoft's plans to pump about $3.2 billion into Britain over the next 3 years. Investments will underpin future growth in AI, come shortly after the country hosted the AI Safety Summit in November to control frontier AI companies and develop responsible AI.
Google calls on Britain's antitrust regulator to take action against Microsoft. Reuters reports that Google claimed its business practices had left rivals at a significant disadvantage in the cloud computing industry. Google says Microsoft's licensing practices unfairly limit competition.
Those are the headlines we've been tracking for you this evening. Impact investment company Aavishkaar Capital has closed its sixth India fund at a corpus of $150 million, 50% higher than its predecessor funds. Now, the fund will back early-stage businesses and growth companies in India and hopes to make 8 investments by March 2024. To talk more on this, joining me now is Vineet Rai, the founder of Aavishkaar Group and the managing partner at Aavishkaar Capital. Vineet, welcome back to Startup Street. Now, Aavishkar's sixth fund is largely focused on scaling up impactful businesses. So tell us how you plan to help companies transition to a stage where they can get private equity or funding or go in for an IPO. Also, who are the key investors in this fund?
Thank you, Shruti, for having me on the show. And first, raising a fund during challenging times is always a good thing. I always say it's a relief that you raised a fund. One of the key things that Aavishkaar has done, and not many people know about it, is that we have actually participated. 4 of the companies that we actually participated as founding investors have done IPOs, and that's a skill that we have learned over a period of time. Utkarsh Small Finance Bank was the latest that we were participant from zero till IPO. Now, that's a part that we had not highlighted enough, and that's why we thought, why not actually make it as a strategy and not just do it selectively or see it happen coincidentally. And that's the reason why we actually made it part of the core strategy of the fund. Impact is core to everything we do, but what we have learned over a period of time is technology is going to play a fairly significant role if we want to deliver impact and create significant scale.
Sure.
And so when we went to our LPs, and our LPs include IFC, British International Investment, but more importantly, 2 of the biggest fund of funds that Government of India has launched, SRI Fund and SIDBI Fund of Fund.
Okay.
There are some Japanese investors, and so there are some other jurisdictions as well. But largely, these are the core investors around which we have built the fund. And we are trying to use our skills of last 20 years, given that we are one of the oldest India fund as well, gives us a lot of experience to use in scaling and building companies.
All right, Vineet, like I mentioned earlier, you plan to make 8 investments by March next year, deploying over 30% of the $150 million corpus. You've already invested, I believe, in a couple of startups. If you could throw some light on that. And what areas are you looking at, and what is the ticket size of the investments?
So we have made 4 investments till now, and we have approved 4 more investments, which hopefully, with some regulatory approvals, etc., by March should make our portfolio reach 8 investments. The 4 investments that we have made are in, the first one was in EdTech, the second one is in Agri-Tech, the third one is a Dairy Tech, and the fourth one which is interesting and a slight deviation from what we normally do, and also highlights the current status. Climate and COP28 is going on, so we've done a climate tech investment as well. These are the 4 investments we have already made. And the 4 investments that we are looking to do includes one company which is focused on livelihood. The other is actually focused in insurance manufacturing. And then 2 are in financial services.
Okay. Vineet, you also claim that Aavishkaar India Fund 6 is the first 2x flagship fund in Asia, which means it will apply gender-based metrics to its investment strategy. If you could elaborate on this and also tell us how many of your investments will be 2x eligible.
So let me start by saying what is 2x eligible for us. So out of the 4, 2 are actually, so 50% of our portfolio already meets the 2x criteria. But interestingly, the next 4 are all 4 meet actually the 2x criteria, which means by the time we finish 8 investments, 6 out of 8 would actually meet 2x criteria. Now, what is 2x? Generally, 2x actually means that you as a fund take it upon yourself to not only do gender-based metric to investing, but will be evaluated against it also. And this is a certification that largely comes from LPs. So just to give you an idea, so basically a company, if it is owned by a woman, more than 50%, or it has a significant amount of leadership coming from more than 30% coming from women, or it is actually a massively employment generation from women's side, or it is designing a product which is totally consumed by women. Those are some of the criteria that you...
All right. Very quickly, I want to ask my final question. Aavishkaar Capital, currently manages over $530 million worth of assets across 8 funds, 6 India funds and 2 international funds that include an Asia and Africa focused ESG vehicle, which you plan to close by 2024. So first, if you could elaborate on that and what is the impact you're hoping to create. And second, Vineet, if you're also now looking to launch a carbon fund for Asia, if you could tell us the corpus size and how soon do you plan to launch?
Yeah, so I think the world is a very dynamic place, Shruti. So we continue to be quite dynamic in what we are doing. Our international fund is actually targeted to be around 120 million. We are right now around $55 million committed. We are also launching an Indian credit strategy, which is extension of what we are doing right now in Southeast Asia and Africa. We want to do it in India as well. And in terms of our climate strategy, we have actually incorporated the climate part both in the current fund, which is largely focused on the climate tech side. But we have been looking at the natural resource-based biosequestration, which is essentially helping people coming from lower income strata to grow trees and utilize the carbon sequestered by the trees to trade into the carbon credits, global voluntary carbon credit market. The idea is there are two things that we are considering. One is actually to raise a fund. The other is actually to become a manager of a permanent capital vehicle. And that discussion is still in early stages, let me put it this way.
All right, Vineet. Unfortunately, we'll have to wrap up. But many thanks for joining us on Startup Street and wish you the very best for your 6th fund.
Thank you so much.
Okay, from an investment company to a founder that has raised money, Tiger Global-backed vendor digitization platform Bizongo has acquired Factory Plus, a factory digitization app for MSME factories. The founders and team of Factory Plus will join Bizongo and Better Capital and Titan Capital, who had invested in Factory Plus in its seed funding round earlier, will exit the company after this deal. Now, this is going to help Bizongo integrate Factory Plus's mobile-first software-as-a-service capabilities to provide local manufacturers with access to automation and real-time updates. Joining me now to update us about this deal is Sachin Agarwal, the co-founder and CEO of Bizongo. Also with me is my colleague, Arundhati. Sachin, welcome to Startup Street. Thanks very much for your time here. You haven't disclosed the size of the deal. What is that? And, the synergies you see from this acquisition because of which you look to close this deal.
Yeah. Good evening, Ritu. Thanks for having me. And we have not disclosed the size of the deal, but we have acquired 100% of Factory Plus as a combination of cash and equity. The idea behind the acquisition and the synergy that we see is pretty simple. We have more than 10,000 SMEs and MSMEs on Bizongo's platform today. And we believe that these SMEs can benefit massively through mobile-first digital solutions. And that's what Factory Plus provides us as a capability, where we'll now bring mobile-first digital solutions for all our SMEs and MSMEs partner businesses. And we have seen mobile has been a huge driver of digital adoption in B2C, and we believe that's going to happen in B2B led by SMEs going forward.
All right. Hi, Sachin. Arundhati here. Just to understand this a bit better, can you tell us a little bit about Factory Plus? How many factories does it have on its platform? What kind of growth is the business seeing? And what about revenues and profits that it generates at this point?
Hey, hi, Arundhati. Good evening. So Factory Plus is a platform where it has close to 4,000 factories today. This is now will get integrated with the 10,000 factories which are already there on Bizongo's platform. It has been seeing before acquisition close to 40% growth month on month. And I think in terms of the core synergies that it will bring for us, it will help us service the SMEs and MSME suppliers that we have on platform today, who we have not been focusing a lot on monetizing and providing them value-added services. It will help us offer a mobile ERP to these SMEs and MSMEs, and bring our embedded supply chain financing services, as well as our embedded integrated raw material buying services on the mobile app. So that's how we see the core synergies coming in.
But sure, Sachin, what about your own Bizongo's financials? You haven't released the FY23 numbers yet, but earlier you had indicated that revenue growth may see some moderation this year because you want to focus on profitability. So tell us what lies ahead in terms of what kind of revenues and profits you'd be able to clock in. Are you hopeful of breaking even this year, before or after tax, your profit numbers?
Yeah. So I think in terms of our previous growth since FY21, we have grown approximately 17.9 times in terms of top line or GMV. But as you rightly said, I mean, last few years, the focus has been very sort of high in terms of bottom line profitability. The good part was that in this phase of last 12 to 18 months, we have massively focused on that, and that resulted into we having back-to-back year of EBITDA profitability, and last year was actually cash flow positive as well for us. So this year we will turn PBT profitable on a monthly basis, and from here on the focus would be enhanced on growing the bottom line and profitability, and we believe that we should be able to clock upwards of 50 to 100% growth year on year in the next couple of years.
All right, Sachin, if you could quickly tell us, speaking about growth, last year you'd acquired Hexa and Clean Slate Technologies, and now it's Factory Plus. So are you looking at acquisitions as a key engine for growth of the business? And if so, are there any other areas you're scouting for an acquisition in? Any other companies you're looking at this point?
Yeah, I mean, we do believe that, partnering with businesses and startups who bring unique capabilities and complementary skills is definitely something that we continue to look out for. And definitely, I mean, any sort of startups or businesses which become value driver to our customers, suppliers, or FI partners, banks and NBFCs, and have a digital solution for them which can be well integrated and can help us enhance the value that we can deliver to this entire ecosystem. We will be in continuous lookout for those such solutions, and look for inorganic growth as a core growth strategy, because we believe that there are certain things that we are very good at, but there are certain areas where we want to partner with the ecosystem players where people have built fantastic solutions and tools for businesses out there.
Sure. Sachin, we'd like to ask you many more questions, but unfortunately we've run out of time. But thank you very much for speaking to us here. It was a pleasure. All right, at CNBC-TV18, we aim to acknowledge the unsung heroes, our small and medium enterprises, the driving force behind this monumental dream. CNBC-TV18 and HSBC are bringing India's biggest SME awards platform to celebrate the spirit that has propelled our nation forward. Now, in the special curtain raiser on the 4th of December, Shireen Barnes going to speak to Hitendra Dave of HSBC India about SME success in a globalized economy.
On that note, it is time for us to head into a short break. But coming up next, cloud and AI optimizer Crayon inks a partnership with Amazon Web Services to launch an incubator for startups in India. How will this incubator help the startup ecosystem out here? We tell you after this short break. Stay tuned.
Welcome back to Startup Street. Cloud and AI optimizer Crayon has inked a partnership with Amazon Web Services to launch an incubator for startups in India. Now, the incubator will focus on helping startups and independent software vendors, or ISVs, develop cloud-based digital solutions for public sector applications. CNBC-TV18's Jude Sennett caught up with Crayon's Abhay Joshi along the sidelines of AWS's reInvent Summit in Las Vegas to find out more about the proposal and how many startups it will impact. Take a look.
Well, on that note, it is Friday, so let's take a look at what's happening in the deal space. Right now, according to Venture Intelligence, this week saw a total of 15 deals worth $539 million. And let's take a look at some of the notable ones. Electric bicycle eMotorrad got $20 million from Panthera Growth Partners, Ulterior Capital, Green Frontier Capital and others, while payment solutions provider Commerce backed $10 million from BNext and others. While startup lender UC Inclusive Credit raised $9 million from Insider Fund.
Well, that's not all. Personal care products maker InnoWist attracted $7 million from Amazon, Axel India, 72 Ventures, Source VC and others, while gaming-focused startup Brightpoint Studios raised $6 million from Peak 15 Partners and Nexus Venture Partners. Now, according to Venture Intelligence, for this year, startups have seen 73 deals valued at $6.5 billion.
On that note, it is time for us to wind up this edition of Startup Street. From Shruti, Ritu and I, many thanks for watching.